The US Fed delivers a hawkish pause, holds off raising rates as it looks to measure the impact from the previous 10 straight rate hikes, but also projects another 2/4 percentage point hikes before the end of the year. Stocks on Wall Street fall off highs, but the Nasdaq and S&P 500 recover the close with gains. Asian markets largely higher as investors digest the Fed's hawkish pause. The Chinese central bank cuts lending rates to boost a faltering economic recovery, while the Bank of Japan kicks off its two-day policy meeting. The SGX Nifty is indicating a lower start for the Indian market. Oil prices remain volatile, drop about 1% to about $73 a barrel as the Fed's hawkish pause spooks the market. A large build-up in U.S. crude stocks also clouds the outlook on demand. Sources tell CNBC TV 18 that Bain Capital is set to offload 0.7% of its total 1.3% holding in Axis Bank through a block deal worth $267 million. The IMD sounds a red alert as Cyclone Biparjoy makes its way to the Saurashtra and Kutch coasts. Over 37,000 people have been evacuated from vulnerable areas in Gujarat. Multiple teams of the National Disaster Response Force have been deployed, while defense forces are on standby to help with rescue and relief work. Good morning. In the Mumbai News Center, I'm Sonal Bhutra. You're watching Power Breakfast. Of course, the big news has been Fed pausing the rate hikes, but speaking about two more rate hikes which are possible in this year itself. So there has been an impact on global markets. But before we speak about that in detail, let's take a look at what the Asian markets are doing. They're largely higher. The street has mostly digested the hawkish pause that happened in the US markets. The Taiwanese index is up 0.3%. We have the Hang Seng, which is higher by 1.3%. Across the board, we are seeing some rally in the Asian markets. And if we look at the other indices as well, something like a Shanghai is up 0.3%. We have Nikkei, which is higher in trade, flat, but with some positive bias. But the SGX Nifty, that will come up for you on the screen, and that one is indicating that the start for our own markets, well, that could be in the red. A 32-point downtick is what the SGX Nifty is indicating right now. So let's focus on the biggest skew for markets today. The Federal Reserve decided to hold rates in its June policy in line with expectations, but its commentary remained hawkish as they hinted at two more hikes later in the year. What does this hawkish pause mean for markets and the U.S. economy? CNBC's Steve Leisman gets us all the details in this report.
After 10 straight rate hikes, the Federal Reserve delivered an expected and welcome pause, but it came with an unexpected and most unwelcome forecast that it could hike rates twice more this year. So now for investors, it comes down to the question, do you believe the Fed forecast for two more rate hikes or don't you? That is, are you feeling lucky you want to trade against the Fed? Well, Fed Chair Jay Powell made clear the rate-setting open market committee is serious about bringing down inflation.
As you can see from the SEP, the committee is completely unified in the need to get inflation down to 2%, and will do whatever it takes to get it down to 2% over time. That is our plan. And, we understand that allowing inflation to get entrenched in the U.S. economy is the thing that we cannot allow to happen.
Here are the forecasts that rocked markets. The 2023 median forecast among Fed officials went up by 0.5 point or 2/4 point hikes to 5.6%. Cuts are still baked in for 24 and 25, but a little bit less than had previously been forecast. What perhaps surprised markets most was the conviction among members of the FOMC. 4 members support one more hike, but 9 members, or half the committee, supports 2 more hikes, and 3 members support 3 or more hikes. Despite that conviction, worth noting, veteran bond investor Jeff Gundlach, he doesn't believe the Fed. He thinks inflation is going to fall sharply in coming months and the economy will slow, and the Fed won't hike. The market, however, giving the Fed a split decision. It's embraced in the futures market with a 60% probability of the idea of a July hike, but no contract right now is currently trading with a second hike built in. I'm Steve Leisman, CNBC Business News.
Okay, all right. Thank you for that report. Let's get in more on that hawkish commentary. U.S. Fed Chair Jerome Powell said the June policy decision cannot be called a skip and that no member of the FOMC is writing down a rate cut. Let's listen into the Fed Chair's comments post the policy announcement.
Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. You know, we don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right, and this is, if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
And reacting to the Fed's decision, Chair Jerome Powell's comments, Wall Street ended Wednesday's trading session mixed. The Dow Jones closed over 230 points lower, the S&P 500 ended flat, and the Nasdaq Composite, the day's outperformer, was up over 60 points. Oracle closed a record high after a 50% surge this year and is on pace for its best year since 1999, outperforming large-cap tech stocks. Remember, Oracle had reported a solid beat on both in its top line and bottom line on Monday, led by steady demand for cloud services. Let's also listen to some reactions coming in on the Fed decision from former Fed Board Governor Frederick Mishkin, Jefferies' David Zerwas, and DoubleLine Capital's Jeffrey Kunlak.
The CPI has come down a lot, but the core inflation and sticky price inflation has been slower to come down. And the bottom line is the Fed's still a long way away from the 2% target that they've announced. And it's very important that they have credibility to keep inflation at that target. And also, the economy is still much stronger than people expected, as the Fed actually got behind the curve. And when you get behind the curve and inflation goes to very high levels, you really want to convince people that you're serious about keeping inflation under control. That actually affects inflation expectations, leads to better performance of the economy.
I'm kind of okay with the market being a little bit more optimistic on how fast inflation will fall. They've been there pretty much this whole time. And the reality is, on the core numbers, they haven't been right. The market hasn't been right. And the Fed's been right to be a little bit more concerned. So, but the market shrugged that off. And I think they've shrugged that off because labor markets have stayed strong. The economic data has been pretty good. And we've had 500 basis points of tightening. And this economy's taken it like a champ. And I think we really have to step back actually and ask ourselves, how is it that that 500 basis points really didn't transmit itself the way many people would have thought?
It wasn't hawkish in the action. It's the pause. I feel like the Fed is getting kind of Mr. Magoo-like again, where the last meeting it was a hike, but it was called a dovish hike, and now we've got a hawkish pause. I wonder what the mix will be in the July meeting. Because it seems like the unanimity of opinion that we need more rate hikes has been made clear, but the path of rate hikes is all over the place. I'd like to remind people that the Fed has had a bad record of forecasting where the Fed funds rate is going to be.
Okay, that is all the opinion that we are getting on the FOMC decision that we got overnight. But let us now get you the final update on our global market wrap this morning. Positive cues coming in from Europe, where the French CAC closed with gains of 37 points, the German DAX up 80 points, and the British FTSE gaining about 8 points. The big cue from Europe today will be the European Central Bank's rate decision due later today. The ECB is expected to raise rates by 25 basis points, despite the Eurozone region entering a technical recession. Commentary on inflation, the rate trajectory will be important now. Okay, that's all about the global markets. We'll do one thing, slip into a short break, and then when we return, we'll tell you how these overnight cues and, importantly, the Fed decision will impact our own market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast here on CNBC TV 18. Well, we spoke about the global markets. Now let's get in our research team joining in to tell you what the Indian market trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Thanks for that. Well, yes, like you've been talking about, it was a hawkish pause really from the Fed. They are undecided about July. The Fed has indicated more hikes ahead. So it was a mixed close for the US markets. But the other piece of news is China, which has cut key policy rates for the first time in 10 months because of the economic parameters being slower than anticipated. New Zealand has slipped into a technical recession as well. So all of these cues need to be kept top of mind as well. Asia largely mixed at this point in time. SGX indicating a bit of a soft start. The Nifty for yesterday was above 18,750. FII's net bought for the second consecutive day. So FII's net bought around 1,700 crores plus. DII's net sold around 654 odd crores. So overall, we'll probably dance to the tunes of the global markets in today's trading session, maybe a little bit of profit booking, but the larger trend of an up move is probably intact at this point. Just watch for a couple of factors. The Bank Nifty, which was in the red in yesterday's trading session, so that didn't participate. Metal stocks, considering that China's moves is probably going to fire up incremental, or we could see incremental buying in metal stocks, and IT stocks, any kind of incremental selling pressure, considering that JP Morgan was quite cautious in their note yesterday. So these would be a couple of points to watch out for.
Okay, all right. So that is the market setup. Thank you, Ekta, for that. Let's talk about some stocks that will be in focus today. Vivek is joining us with that list. Hey, Vivek.
Well, that's right. So, a lot of stocks to keep on your radar in the back of some important news flow that's transpired. First on our list and the biggest on our list today is Axis Bank. What we understand from our sources is that Bain Capital today is looking to sell stake up to almost $267 million via a block deal. What we understand is that the offer price range for Axis Bank block deal would be at a 0.7 to 1.4 discount to yesterday's closing price, and so the price range comes to around 964 to 977 at the upper end of the price band. So Bain Capital would be exiting close to 0.7% of the total 1.3% holding that it has in Axis Bank. Keep an eye out for HCL Tech, an important development coming in there. The company has gone ahead and expanded its partnership with Google Cloud to help on generative artificial intelligence. The company also says that it will now be required to go ahead and hire more engineers for this particular development. KFin Technologies, an interesting development over here as well. The company has gone ahead and withdrawn its application to be a depository participant with NSDL, that is the National Securities Depository Limited. They had gone and approached to become a DP on October 17, 2022. It now stands withdrawn. Keep an eye out for CDSL as well. Yesterday saw a very large block deal along expected lines. Like we had reported, BSE has exited 4.5% stake out of the total 20% stake that it held at the end of the March quarter. We understand this was mainly to go ahead and comply with regulatory requirements. One of the largest buyers was ICICI Prudential Technology Fund, buying almost 5.28 lakh shares in the company. V-Mart Retail yesterday was a big mover. T. Rowe Price International went ahead and sold 1.9% stake in the company. It's almost a complete clean out trade from T. Rowe. The biggest buyer here was Amansa Holdings, buying almost 3.37 lakh shares company in yesterday's block deal.
Okay, a lot of stocks in focus. Of course, the big one will be Axis Bank today. Finally, let's talk about the cues from the F&O space. Manglam is joining us with that. Hey, Manglam.
Good morning. So, the Fed's hawkish pause was reminiscent of what the RBI did. It's a pause, but perhaps not a pivot. That's something we'll watch out for. The SGX Nifty, as a result of which, is indicating a start down by about 30 odd points. And that really reiterates the Nifty congestion zone that we have, 18,750 to around 18,800. The question is, will that continue even now? Because if you just take a look at it, yesterday's high was eerily similar to the high that we saw last week, which was 18,778, and yesterday's high was 18,770 itself. Again, telling you that there is a fair amount of congestion. What could take the Nifty out of that congestion? Outperformance from the Nifty Bank. Because if you take a look at it, again, yesterday we saw the Reliance stock contribute a fair amount to the Nifty's up move. And the second half, we saw the IT index recover from lows as well, ended just about 0.15% lower. But the Nifty Bank has been underperforming. What's good is the FII's buying in cash market. For 2 days in a row, they've bought over 1,500 crores. Yesterday it was around 1,700 odd crores as well. In index futures too, they are increasing their long exposure. So yesterday they added about 11,000 longs for about 3,000 shorts. So the long exposure for the FIIs in index futures is now at 54%. Remember, this was the short exposure, 54% just a few days ago itself. So that's been increasing. Importantly, it is weekly options expiry today. And ahead of that, we've seen both calls as well as puts being written. But there have been more calls written at higher levels, around 18,750, 18,800. So both those calls come up for you, 18,750 to 18,800. Again, those guys who've written it are expecting congestion between 18,750 to 18,800 itself. Were the market to break out of that congestion? Well, we've seen some punt buying at the 18,850 call as well. As far as the puts are concerned, we've seen some writing at 18,700 and 18,750 put, telling you that the Nifty support has moved higher to 18,600 to 18,650 itself. The Nifty Bank, 44,000 is the fulcrum to watch out for. The 44,000 call and put have maximum open interest, and 44,000 is where the 20-day moving average is as well. And finally, just keep an eye out on one stock. We had pointed out that Z may enter the F&O ban, and it has indeed entered the F&O ban.
Okay, a lot happening in the Z stock as well. Thank you, Mangalam, for making sense of the F&O cues. And this is our Power Prep segment. We'll do one thing, slip into another break. And when we come back, we'll talk about the commodities market because a lot is happening there as well. Stay tuned. Welcome back. Still tuned into Power Breakfast. Well, it's time to talk about commodities now. Manisha Gupta is joining us with all the update from that space. Hey, Manisha, good morning.
Hey, morning. Thank you for that, Sonal. Well, we have seen further decline come in for the crude oil prices. We are again flirting with that $68 per barrel mark, while, of course, the U.S. Fed meeting has done its damage, where the Street is now working with a 50 basis points of a rate hike before this year ends. And the higher rates for longer is another theme that has been now stuck onto the markets here. But for the crude oil prices, it's a double whammy because you also are looking at the U.S. inventories gaining much higher. Markets were anticipating 500,000 barrels of an increase. You have more than 7 million barrels of an increase here. So that tells you that the demand in the U.S. markets itself is weak. The U.S. production in the meanwhile has been near record high of 12.6 million barrels per day. That's weighing onto the markets as well. But it has been a good time for the metal space overall because the new home prices sales in China has gained for the first time in 13 months. So this is the second straight good news coming in from China, which has been supportive. Overnight, you've seen copper prices gain up by 1%, and it has been a 3.5% of gain for zinc and nickel, both these metals too.
Okay, all right, Manisha, thank you so much for joining us with that commodity update. Have a great day. With that, let's move on. US and India will make an announcement on semiconductor supply chain next week. That's the word from Jake Sullivan, the White House National Security Advisor, who is in India ahead of Prime Minister Modi's US state visit. Speaking to a select group of journalists, he also said that the General Electric fighter jet deal will be an important transfer of technology to India. Parikshit Luthra joins us with more on this. Parikshit, take us through the key comments by the US National Security Advisor.
Jake Sullivan, the National Security Advisor, is in New Delhi ahead of Prime Minister Modi's US state visit. He met a select group of journalists and made some very important comments about what's on the table when Prime Minister Modi meets President Biden next week. Remember, this will be only the third state visit that President Biden will host during his tenure, and Prime Minister Modi will be reaching the United States on the 20th. Jake Sullivan told us that this visit is going to be truly historic and will lead to substantial announcements and serious deliverables on critical technology, defense and trade as well. There will be an announcement on semiconductor supply chains as early as next week. So during this visit, we will see an agreement on semiconductor supply chains. What this will entail? Well, Jake Sullivan has said that US is putting everything possible behind semiconductor manufacturing in India. US would like to contribute to the growth of semiconductor industry in India and also build talent and expertise. So there possibly would be outcomes where there would be collaboration between US research institutions, academic institutions, companies, startups on how to transfer technology, how to train the Indian workforce, build talent when it comes to semiconductor design, packaging and manufacturing as well. So we're really looking at the whole gamut of the relationship when it comes to semiconductors, not just at one particular aspect. On the GE jet engine deal, Jake Sullivan said that this would be an exquisite deal, which would be important for the transfer of technology. President Biden has asked for removal of all obstacles to deepen defense technology cooperation with India, and Biden administration is also working on removing regulatory barriers to defense exports to India through executive actions. There are also certain legislative changes which would be needed in order to transfer technology to India and have a stronger defense partnership. Jake Sullivan said that this visit of Prime Minister Modi would pave the way for more congressional or legislative changes in the Indo-US defense partnership as well. The progress on jet engines would be very crucial for cooperation in other aspects of defense technology and defense production, and US and India are also discussing sale of other defense equipment, including unmanned aerial vehicles. So let's keep an eye out for what happens during the Prime Minister's visit to New York and Washington, D.C. But clearly, big agreements, big deliverables on semiconductors and the defense sector on the cards.
Oh, yes. Pariksha, thank you so much for joining us with details on this one. But now let's get to the latest on Cyclone Biparjoy. The extremely severe cyclonic storm is expected to make landfall this evening between Gujarat's Mandvi town and Pakistan's Karachi coast. A red alert has been issued for Saurashtra and Kutch coast today. At least 74,000 people living near the coast have been evacuated to safety so far. Meanwhile, Kutch is seeing heavy deployment of NDRF and SDRF teams in anticipation of the storm. Schools, colleges and offices in 4 districts of Gujarat will remain closed today. Okay, with that, we'll take your leave on this edition of Power Breakfast. Stay tuned. All the market action on Bazaar Morning Call that comes up next.